Good afternoon all, welcome to Thursday, it's August the 19th here, Amplify Trading's morning briefing, or afternoon briefing I should say. If you can all hear me and see my screens, can you just type a Y in the room so I know everything's being shared as it should be. Great stuff. Hi guys, how you all doing? Can't believe how time is flying, so nearing the end of August. And it's really been a kind of August market. There's been no real fireworks, to be honest, and yesterday was a classic example of that. We did trend higher yesterday, really for the second day in a row, but it was much more subdued than Tuesday's push higher. The Dow finished up 9 at 10,415 and the S&P up 1 at 1094. Not a huge amount of action, the main focus being on the oil inventories actually on Thursday. At 3:30, and I'll come to those later. Bearish figures were expected, and bearish figures we got as expected, and we had a classic movement in the oil market. But this chart I'm showing with you now is my E-mini S&P. This is a 60-minute chart, so each candle representing 60 minutes worth of action. There's a classic August pattern seen here, really hemmed in within this range, going from 1083.75 to 1098.50, and that's where we're looking to trade off today, those levels. We're expecting a sideways moving market again, as the calendar from now on relatively light. The main focus of today being, of course, as Thursdays tend to have it, initial jobless claims. Quite an important number really, considering the amount of focus that's been given to the jobless rate in the US. Still a very key and sensitive point to the perception of the US economy, especially from those who are living there. What have we had this morning? Well, we've actually had a bit of a pick up in the calendar, so we've had some interesting news. UK had an auction, 1.2% index linked tap auction. That was much better than expected. Bid to cover 1.94 versus 1.63. Also out the UK, Britain posted a much smaller budget deficit in July than economists had forecast, putting the coalition government on course to reduce their record levels of borrowing this year. So we showed that net borrowing was 3.17 billion versus 5.52 billion a year earlier. Really fantastic news for the coalition, and overall there's a general feeling of more positive economic sentiment coming out of the Eurozone. Apart from France, guys, I don't know if you were in the room earlier and you saw that there are market rumours of perhaps a French sovereign rating downgrade. And this is the crazy thing about Europe at the moment. That came out about an hour earlier before the Bundesbank in Germany raised German 2010 forecasts from 1.9% to 3%. Let's have a look at what happened in the reaction to that. Well, this morning, this is the DAX. We did have that pull down of contagion fears, sovereign debt fears within the European economy. But then the rumours and the final result from the Bundesbank German growth forecast smashing the DAX higher. We had a really nice push above this resistance level at 61755 that just gave a huge leap forward. Let's have a look at the euro reaction. Well, I was culprit to this, and there's some nasty spider's legs in the euro. Off that data we did have this push higher. You can see this long push higher here towards 128.53 to be strongly rejected only seconds lower, and then I've put in the room, there's FX commentary, there's market talk of there being large stops above the level of 128.60, so just a few ticks higher than that, a few ticks higher than where we are now. There's talk of there being large stops here, so perhaps those players putting some weight to keep the market down below this level. But certainly choppy and quite nasty action in the euro off that very good positive German data. So do be careful trading that currency pair going forward. Okay, so other than a quiet day expected today, an initial jobless, what have we got? Well, the weekly jobless claims, they've moved stubbornly higher over the past 2 weeks, which is why we've got, there should be some action on this figure. Economists are expecting to see 478,000 claims, down from last week's 484. Okay, we've also got the Philadelphia Fed and leading indicators coming out later on this afternoon. So there's some action coming out today, guys. More importantly than that, in my opinion, we've got Fed James Bullard speaking, okay, and it was him that stirred up the markets recently, saying that the US was facing a Japanese-style deflation. Okay, and that the Fed may need to be more aggressive with his purchases. So he was obviously clearly a backer of the recent QE, or the QE2, or the QE Lite, whatever you want to call it, that we saw coming out of the US. However, we're also getting Evans speak, and I need to confirm this, but I think it's just after we get Bullard. And he was of the other camp. He might be answering questions as why further QE was actually taken place, and it's just a clear example of there's a big divergence of opinion in the US at the moment as to how to best operate now, how to continue the recovery, how to ensure economic growth. One of the problems being political, and as you guys know, trade wars tend to kick off during times of hardship. One of the problems with these huge QE programs, as far as the US and as far as the US Main Street Observer is concerned, is that this QE program provides a huge amount of money to the US consumers to spend not on US goods but to import more goods. Okay, so the QE programs in the US are actually being seen as supporting exterior nations, and there's the whole argument with Japan and China, so it was China specifically. On that rather sensitive note, I've got a report from CNBC saying that this afternoon the Central Budget Office in the US will give their forecast on next year's deficit. Obviously the US want to see their deficit down. The last report for the forecast of 2011 was a deficit of $1.42 trillion, so they obviously want to see that down. Let's have a look at the Bund. Well, this double top pattern still holding for now. I'll just put my little ellipse around there at 1, 2. We did have a move back higher this morning, but on the back of this great German data, the Bund moving lower. Oil market, well, buoyed by the move higher in European equities this morning on the back of the Bundesbank. We're looking for an entry really on 75, but we see this market continuing to range. 78, the trap being between $70 and $80. No clear direction in the oil market, notwithstanding a surprise to the downside on the US economic data. That reflected in our strategy for the E-mini S&P as well. The euro, I've already mentioned, I believe will grind higher on the back of the Bundesbank report, but there's some rats in the kitchen on that currency pair in terms of whenever it tries to move higher, you get these long spider's legs with sharp moves lower. You remember the level from the last few days, 129.06. Let me just go on a slightly longer chart. Don't want that ellipse now. So there was a level at 129.06. Yesterday we did just have that